Equities are lower this morning as talks to end the conflict in Iran remain uncertain. On Wednesday, Iran's foreign minister said it's not currently negotiating with the U.S. to end the fighting. Earlier in the day, Iran state media reported the country would reject a U.S. ceasefire offer, countering with a 5-point list that would give it control over the Strait of Hormuz. As of 8 a.m. Eastern, the price of ICE Brent crude oil was trading at $108 a barrel. Here's what else is on tap this hour. Moments ago, the NYSE announced that it's listing the Global X NYSE 100 ETF, allowing investors to participate in the performance of the NYSE 100 index. I sat down with Global X senior investment strategist Shauna Smith to learn more about the new fund. You're going to want to hear what she had to say. And AI dominated the conversation at last month's Vast Forward conference, and that included its integration with the cloud. A Vast data exec took us through some of the latest innovations his team is working on. Plus, INRIX's chief executive, Brian Mistel, will join me here in studio after his company won an Artificial Intelligence Excellence Award in Analytics from the Business Intelligence Group. He's going to explain how his company's work is making cities and agencies smarter. Well, the Global X NYSE 100 ETF is designed to track the performance of U.S.-listed actively traded securities of 100 highly capitalized technology and tech-enabled growth companies spanning multiple sectors. I sat down with Shauna Smith, SVP and Senior Investment Strategy at Global X ETFs, to learn more about the fund. Take a listen.
So the NYSE 100 fund, it tracks the NYSE 100 index. And what it is designed to do is looking to capture companies that are driving innovation in today's economy. So I think when you think of, traditionally speaking, investing in tech, a lot of people associate investing in technology with the tech sector, but that's no longer the case. You look at technology, it is across industries, across multiple subsectors here. So it's important to give investors exposure to that innovation. So from that larger basket of stocks, this index then looks to identify 100 companies, and they do that through a number of factors. They take into consideration size, valuation, liquidity, growth potential. And from there, the companies that are selected, they're weighted by market cap. So what does that mean for investors? It means that companies that are largest, most influential, carry the most weight within the index.
Why was now the right time to launch this ETF?
When you think of technology right now, the trade and the industry has very much evolved. And traditionally speaking, many people, when they initially thought about investing in technology, it was more so the hardware side of the business. So think computer makers, think chip makers. And now it's so much more than that. Many of the biggest platforms that are driving innovation are using multiple technologies. Think of cloud services, think cloud computing, think of software services, think of artificial intelligence, digital payments, digital media, the list goes on and on. So we very much look to capture that innovation, capture that growth across multiple sectors. And I think a great way to explain this, or a great example of this, is the Magnificent Seven, Mag 7, the group of stocks that are very much thought of as the leaders among the tech trade. But if you take a step back and look underneath the hood, many of the stocks within the Mag 7 actually are vary across and span multiple sectors. So what does this mean for investors? It presents a bit of a challenge, because I think a lot of times when people are looking to invest in tech, they look at sector specific funds, and the limitation there is it's just one sector that you're getting exposure to. Now, on the other hand, you have broad market based indexes, but the limitation there is that could potentially be diluting your exposure that you do have to these companies that are driving technological change. So the index and the fund looks to address that gap.
All right. And what differentiates this ETF from others on the market?
Actually, there are a couple of factors that differentiate this fund from what is on the market. I think first and foremost is that it's exchange agnostic. So what does that mean? It's not just limiting itself to companies that trade on one exchange. Rather, it looks for companies that are driving innovation across major U.S. exchanges. And I think going back to a point I made earlier is that it's not just one sector, not one sector specific in terms of this index and this fund. Instead, we include multiple sectors, multiple subsectors here that have companies that are driving innovation. With that said, I also want to point out, and I think it's important to point out, that it is a very focused fund. It does remain focused, so excludes areas of the market that aren't historically tied to companies that are driving innovation. In this case, one of the sectors that is omitted from the fund is consumer staples. So I think a great way to sum this up is that it's looking to give investors exposure to companies that are driving innovation, driving change in today's economy.
Thanks, Shauna Smith, for that interview. And joining me now is NYSE Senior Market Strategist Michael Ranking. Michael, welcome.
Hi, morning. Thanks for having me.
Right, so we just announced that the Global X NYSE 100 ETF is launching today as Senior Market Strategist for the New York Stock Exchange. Yep. What are you going to be monitoring most closely as this fund launches?
Yeah, look, I mean, I think this is is a great opportunity for investors to have the, to be able to invest in these companies of innovation. Technology is clearly driving kind of so much change and so much of the expansion that we're seeing kind of across the economy, right? And this is, this fund seems to offer, kind of a great opportunity to find some diversification within that, within kind of that innovation and technology, with kind of investments across, kind of different subsectors within the group, right? So it's, it's an an exciting and interesting product.
All right, and the markets will be opened in about 30 minutes. We've been seeing markets go up, markets go down, mostly on news of the conflict in the Middle East.
Yes.
What are you going to be focused on most closely during today's session? Yeah,
so I mean, it's a little cliche, but markets have clearly become kind of headline driven, right? And we're seeing kind of volatility, kind of within, not only equity markets, but across different asset classes, kind of on each headline, a piece of Truth Social, kind of refuting of that coming from, coming from overseas, right? And so, we're watching kind of oil prices are starting to kind of press up, kind of with ICE Brent approaching $110 again. From an equity market perspective, we've seen the S&P 500 has been capped by the 200-day moving average over the last couple of days at 66.30. Look, I mean, it's a very difficult environment in that kind of the range of potential outcomes here are so wide, right? And the longer that this continues, right, the more risk that that we have in terms of kind of the energy markets, and that's spilling into kind of increasing pricing pressures, kind of more broadly across kind of across different kind of different products, right? And as and that potentially leading into some demand destruction, right? So the longer this carries out, kind of the more difficult it becomes, and then you have this kind of potential range of outcomes where there's if things do de-escalate, right? You can very much kind of return to where we were, kind of, and some of the positivity, kind of ahead of this, right? So that's sort of helped markets at this point not really see some of the kind of significant downside that some thought we might see.
And why are markets so reactive to these different headlines or social posts that are coming out?
Yeah, I mean, it's clearly kind of driving. You have this overarching kind of geopolitical situation where you have the administration, kind of very much, kind of likes to, kind of interact, and be sort of forthright with what they're doing. And if you take them at face value, right, we have kind of a deadline, right, on Friday, where either we're going to see a significant escalation or potentially a de-escalation. The other potential outcome is that you just kind of kick the can down the road here and kind of suggest that things are starting to move in the right direction. But once again, it's like that range of outcomes is so significant where if you started to see kind of oil prices continue to move significantly higher, right, you can have kind of pretty significant economic impacts.
All right, let's shift to the Fed. Several policymakers will be speaking today. What do you think investors are going to be listening for? Yeah,
look, I mean, we've seen markets and the expectations around rate cuts, kind of very quickly shift, right? Once again, driven by kind of what's happening in the Middle East, where we've seen oil prices moving higher, and now markets have gone from potential rate cuts this year with the expectation that with higher oil prices, you potentially see higher inflation. You're starting to see even kind of the potential for a rate hike later this year here in the U.S. and multiple rate hikes are starting to get priced in kind of overseas in Europe, right? Look, I think unfortunately, right, nobody knows what the outcome of this is. And the central bankers, kind of don't know that either. And kind of Chair Powell told us that last week, and just kind of moved into this kind of wait and see, sort of approach, right? So I mean, I think that's kind of kind of what markets kind of have to digest, in the short term.
And we are hearing potentially that there could be a rate hike. Data shows that investors are expecting that possibly. What is the impact of a rate hike versus a rate cut?
Yeah, I mean, look, from an economic perspective, right? Lower rates do help, tend to help, kind of spur economic growth, right? And I think, like, from a market perspective, right, these things there's kind of a sequence of events that have to sort of play out, right? And that sequence is oil prices are moving higher, right? Do we get, kind of the demand destruction that potentially comes along with, kind of with those higher prices and higher inflation, unfortunately, like a rate hike at this point by the Federal Reserve, right, this is not a demand-driven inflation, right? This is a supply shock. So they recognize that by hiking rates here, they're not necessarily, it's not going to have the impact that they would necessarily want in terms of kind of helping inflation move lower, right? So I think what the potential that they sort of sit on the sideline with the potential for higher inflation to ultimately lead to some demand destruction, which then ultimately, a few months down the road or 6 months down the road, potentially brings rate cuts back on the table.
All right, Michael Ranking, Senior Market Strategist at the New York Stock Exchange. Thank you so much for joining us.
Thanks for having me.
Coming up, cloud innovation was among the hot topics at February's Vast Forward event. A Vast data executive explained how the technology is being bolstered by AI. Stay tuned to find out how.
It means so much to stand here today on International Women's Day at the New York Stock Exchange. When I look around this room at the leaders, entrepreneurs, advocates, and change makers, I feel something powerful. True power isn't just building something for yourself, it's building something that lifts other women up. That's why I'm using this platform to highlight women-owned small businesses. Gloria once said that dreaming is a form of planning. I dreamed of building something of my own. Today, that dream has become a responsibility. Because the future of finance, leadership, and this economy is unapologetically female. I'm looking forward to ringing the bell and celebrating with you all afterward. Loves it.
We literally have changed the entire baby food industry. To all of these little kids who inspire us and make us want to build a better world, we're actually doing it.
You guys have been there since the very beginning. You deserve everything that happens today.
Welcome back to NYSE Live. Last month's Vast Forward 2026 conference in Salt Lake City brought together leaders to collaborate on shaping the future of artificial intelligence. But that wasn't the only technology getting attention. I was on the ground and spoke with John Z. Stephenson, GM of Cloud at Vast Data, who shared his insight into the latest cloud innovation and how it intertwines with AI. Take a listen.
Ultimately, Vast Data and the Vast AI operating system dominates the neo-clouds and the frontier model builders. We are now just getting into the public clouds. And the collaboration with engineering and the cloud engineer, with the core engineering and the cloud engineering team have been absolutely amazing. And Vast has this unbelievable culture that I've never experienced before, to be honest, of creativity, and the founders, they inspire innovation, and we have the freedom to innovate. Every time we build a product, they want us to go faster, broader, and think outside the box. So Polaris, in a sense, started off as a relatively simple cloud orchestration tied to the marketplace and just doing lifecycle management and automating the deployments, making it very easy to deploy vast AI operating system. Now they want us to go everywhere. And we had to redesign the entire platform just because they wanted to be self-contained and be able to deploy it on-prem in the neoclouds, at the edge, potentially in space.
What does that feel like for you to have to continue to innovate? Is that an exciting challenge?
I haven't had this much fun in years. And so has my team. And the team, every time, Renan, Jeff, Shakar, or Alon, all the 4 founders, if they show up in Iceland, we get a new task to solve. And that's awesome. That's how it's supposed to be.
What is a global control plane and how does it affect enterprises?
So here is the interesting fact that I think nobody has actually done the way we are thinking about it now. We are, in a sense, completely abstracting the control from the infrastructure. So we can have like a global policy engine that Jeff probably talked about, or the fine-tuning engine, or a placement policy algorithm. We can actually start automating where your data is supposed to go, or where you want to bring in the compute close to the data. That is the power of having a global centralized control plane, because it allows the customers to decide, like the world becomes their oyster. There's no longer any lock-in mechanism, because Polaris, as that control plane, as that global control plane, can decide at one point in time that you're running in GCP. All of a sudden, there's an offer for GPU availability in AWS or in CoreWeave. Let's just put a vast AI operating system in that location, create a global namespace, and you're done. You're taking advantage of a just brand new GPU or a TPU or an MPU or Trainium. We can basically seamlessly take advantage of whatever price pops up. And especially now with the supply chain issue in the world, to me, that might be a threat to the legacy providers, but it's a true opportunity for VAST.
How did you get into this line of work, and did you ever think your brain would be thinking in this way?
I have been very lucky in my career. I've done multiple successful startups, and I've been doing this since I was 16, 17 years old. All my co-founders we've done all these different companies, we're all here at VAST now, and we're having a blast. I mean, this is like, it's not common for a company being able to retain and cling on to that startup mentality like VAST has. It's very unique. It's how many are we, 1,200? Still operating like a startup, and I love it.
Do you think there is any limit to where AI or innovation can go?
No. I think every single application built from now on is going to have agents that are maintaining that application and maintaining that pipeline, maintaining or even developing. You know, at some point in time, I will be out of a job. I'm a developer. I'm going to be out of a job. But the good thing is, AI isn't creative. That's why we need humans.
Thanks, John Z. Stephenson, for that interview. And coming up, data from INRIX reveals which U.S. city experienced the most traffic in 2025, and it wasn't New York or Los Angeles. Stay tuned to hear the answer.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by Direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Earlier this week, intelligent mobility solutions company INRIX announced that it won a 2026 AI Excellence Award in Analytics, presented by the Business Intelligence Group. The award recognizes those applying AI to drive real and measurable impact. INRIX CEO Brian Mastilli joins me now. Brian, welcome to the New York Stock Exchange.
Thank you. Glad to be here.
So why is this award so significant?
Well, it's significant because really for the first time, a company has taken just a massive amount of transportation data and then applied large language models on top of it to make it very easy for transportation professionals to ask questions about how to improve their cities.
All right, and what work does INRIX do?
Yeah, so we're a data and analytics company, and historically we've collected all sorts of transportation data, from connected vehicles, from road sensors, traffic signals, things like that, to figure out what's happening. But now you can apply AI to answer, what should I do to fix my problems, or what's causing these problems, and what the impact will be if I fix them. So that's really where the power of AI is changing transportation.
Let's talk about transportation and AI. Why is that a combination that works?
Yeah, because transportation networks create an enormous amount of data, from sensors on the road to cars driving around to mobile phones. There's all this data, but it's very hard to analyze it in real time. So if I want to know what's causing, for instance, a lot of accidents on a certain roadway, it could be speeders, it could be pedestrians crossing, jaywalking, it could be bad signage or something like that. So in order to analyze all this data, historically you needed consultants in 6 months, whereas now you can do it instantaneously using AI.
Why is data so important, and what measurable impact does actually being able to understand data have on different industries and sectors?
Well, sure. I mean, obviously, think about a delivery company trying to make deliveries and optimize their trucks, especially when fuel costs are so high. The data allows you to optimize your overall delivery vehicles based on not only traffic, but closed roads and dangerous spots that you want to avoid. But cities now have the ability to improve their infrastructure without having to build new capacity. They can literally just retime traffic signals in a more optimal way and see a much better throughput in the cities.
Great, and you announced a product called Compass in 2023. You just announced a newer version of it, with Amazon. Can you share more about that news?
Sure. So Compass is our AI engine built on large language models, and we integrate this with Amazon Bedrock, which is a platform that allows us to leverage dozens of different models. So depending upon the question someone's asking, it could be, where's my most dangerous road? But it also could be, look at 5,000 other cities and identify, what I should do in my city based on this particular road configuration. These require different models, so we're able to use Bedrock and analyze across dozens of different models depending upon what people ask.
All right, and in INRIX's 2025 Global Traffic Scorecard, Chicago was identified as having the most traffic. I was shocked. When we were talking about this in the office, we're like, it has to be Los Angeles or New York, and Los Angeles was actually number 4. I believe New York was number 3. Yep. Can you share more about these results?
Well, sure. So the interesting thing is, post-COVID, not every city's come back the same way. We've seen a lot of cities like New York, Los Angeles, that have more workers that can telecommute coming in at different times of day. They're coming in later, right? They're having more flexibility on Fridays and Mondays. Whereas cities like Chicago don't have that many flex workers. So you see much more congestion in Chicago coming back post-COVID than you see in other cities.
Very interesting. And how many cities are currently using your technology?
There's more than 250 cities around the world currently using our technology for either road safety, traffic management, or operations.
Can you share some of the use cases that come to mind?
Well, sure. Let's take Miami-Dade. Miami-Dade is using our AI and our data to help them figure out the systematic causes for fatalities, right? They're trying to reduce fatalities and save lives. Cities like Las Vegas are using it to understand before and after. If I do a project, what was my congestion like before, what was it like after, and how did it improve? So a lot of different applications, but it's really about how do you improve the transportation network.
All right, and what are INRIX's biggest goals for 2026?
Our biggest goals are really release Compass across everything, because at the end of the day, you don't need 6 months and consultants to really analyze data and decide where to invest. Now you can do it through AI. We love seeing that because it can really have a big impact on our society.
All right, Brian Mistilli, INRIX's CEO, thank you so much for joining us at the New York Stock Exchange.
Thank you, Ashley.
Stay with us as IR Impact will ring the opening bell on the other side of the break.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto."
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just 1 minute, IR Impact will ring the opening bell. The company just hosted the IR Impact Awards for U.S. companies last night, right here in New York City, with several NYSE-listed firms among the honorees. The awards encompass 15 categories, including 2 that debuted this year: Best CEO Communications and Best IR Impact. Since launching in 1996, the IR Impact Awards have recognized excellence in the investor relations profession. IR Impact's head of content, Steve Wade, he's going to do the honors of ringing the opening bell, and he's going to be surrounded by IR executives from numerous NYSE-listed companies. There he is. There they are up at the podium. Later this hour, Wade is going to join me to deliver his takeaways from last night's event. Let's hear the bell. You just saw Steve Wade. He is IR Impact's head of content. He just rang the opening bell. IR stands, of course, for investor relations. These professionals and business functions bridge the gap between mostly public companies and the investor community. And the stock market is officially open for trade. Joining me now is Adam Turnquist. He is the Chief Technical Strategist at LPL Financial. Adam, welcome.
Hey, good morning. Thanks for having me on.
What are you going to be monitoring most closely during today's session?
Well, right now, the S&P 500 is at an uncomfortable spot. We're below the 200-day moving average, and we're coming into support right around the November lows. We'll call that 65.22. So that's going to be a key line in the sand for bulls to defend today. We're not far from those levels. If we break it, it does open up some downside risk, potentially to around 61.50, 61.75. So we're talking the potential to go into more correction territory. All of this, of course, is really being underpinned by what's going on in oil, another market we're watching very closely, and it's clearly in the driver's seat right now for risk appetite.
And why are markets so reactive to oil? And what do you think has to happen for the oil volatility to end?
So timing is everything right now on the oil trade. The longer this conflict goes on, the more damage there is not only to equity markets, the more that weighs on inflation, the economy, and then monetary policy when you think about the narrative shift we've seen just over the last few weeks. So when we look at Brent crude oil right now, there's really three things that we're looking for price to break support around 98 to 100. We're above those levels. We're looking at implied volatility in oil markets as well, for that to subside and to stabilize. And then we're also looking at the Brent futures curve. What is the market pricing in for longer dated contracts? Over the last week, we have seen the futures curve compress a little bit. So there's some hope, at least for maybe a near-term resolution, and that we'll get the Strait of Hormuz opened up again.
All right, and which areas of the market are showing leadership as we see risk appetite somewhat fading?
Well, you nailed it. Risk appetite has been fading. We're seeing that in the rotational pressures within the index. If you look at sector leadership right now, certainly more defensive. Energy, a clear outperformer on the back of higher oil prices. We think industrials is a spot where investors can take a look. We recently upgraded the sector to an overweight. It does have exposure to aerospace and defense. When you have high geopolitical risk, it does open up the checkbook for a lot of countries to spend more on defense. So that's an area that we like. When we look at some of the other sectors that are weakening, financials really stick out. Less than half the index in some form of an uptrend, only about a quarter of the index now above their November lows. So there's been a lot of technical damage there. Banks are holding up relatively well, but when you think about the durability and strength of a bull market, you want to see financials at least participating. So really watching for any type of recovery in the financial space is a signal maybe we're getting close to an inflection point in the broader market.
All right, and let's shift to the Fed. According to the latest data, a majority of traders do not foresee a rate cut this year. Some even saying we might see a rate hike. What are you pricing in?
I think the biggest technical development that we've seen, and the most exciting chart, we'll call it, has really been in the fixed income market. When you look at what happened last week on two-year Treasury yields, which track Fed policy expectations, we had a major breakout in two-year yields. Breaking out of this range it's been stuck in for several months, back above some key technical levels, and that really marked a narrative shift from how many rate cuts are we expecting to more of a regime of rate hikes. And that's really what we're seeing play out in the Fed funds futures market. Longer duration, also painting a similar story when you look at what happened in 10-year yields, breaking out above kind of this 430 level. That introduces upside risk maybe to around 450, 460. That's going to be a problem for equity markets, especially if we get there in relatively short order. So it's a complicated macro backdrop right now when you factor in the policy shift and also what's happening in interest rates.
And with those rises in two-year Treasury yields, what signal is that sending about monetary policy expectations?
So it does suggest more of a stagflation type of environment. We had the Fed raise their own forecast for inflation. They did raise their growth forecast as well, but it does suggest we're probably going to be talking more about rate hikes this year. And it's not just the The central bank here in the US, it's the European Central Bank. They're expected to raise rates. The Bank of Japan expected to raise rates. The Bank of England expected to raise rates. So there is global cohesion in terms of this shift in monetary policy. And that doesn't really weigh well for risk appetite in the market. And you're seeing that across the globe. It's not just a US story.
All right, thank you, Adam Turnquist, Chief Technical Strategist at LPL Financial, for joining us on NYSE Live.
Thanks, Ashley.
Still to come, marketing leaders will be taking their talents to South Beach next month for the Possible Conference and Expo. Possible Global President and co-founder Christian Muka will join me to discuss what's in store for the event. Meanwhile, MotoGP made a pit stop at the NYSE earlier this week. A pair of racers helped set the scene ahead of the series' upcoming race in Austin, Texas this weekend. Plus, I'm going to speak with today's bell ringer, IR Impact Head of Content Steve Wade, about what last night's awards event revealed about the IR industry in 2026. Stick around.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the Architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Next month, leaders from across the marketing industry, more than 5,400 to be precise, will convene in Miami Beach to take part in the Possible Conference and Expo. Joining me now is Christian Muka, Possible's global president and co-founder. Christian, welcome to the New York Stock Exchange.
Thank you so much. Thank you for having me.
Tell us more about the Possible Conference.
Yeah.
What is your mission?
So the Possible Conference is more than just a conference. It also provides a lot of activations. It happens indoor and outdoor, which makes it so interesting for a lot of industry people to come there. A couple of thousands are coming to Miami every year now. We're doing this for the fourth time in total, and Possible is operating at the intersection of marketing, media, and technology. And culture as well. So that combines the entire marketing world, everybody who's connected to marketing, which means the brands, the agencies, consultancies, the tech companies, obviously, the creator economy. So everybody is coming together to share their thoughts and insights. And it makes it so interesting because these areas are the fastest growing areas in our industry. So they're spending trillions of dollars, but they also, I see a big shift of these trillions of dollars right now because of technology, like AI, for example, because of the changed consumer behavior. So this is a very, very interesting time to bring everybody together.
How are we seeing AI impact marketing? I feel like I just keep reporting on stories about new prompts and new products that help like streamline marketing campaigns. What are we seeing in that space because of AI?
Yeah. Let me start with, so far I've seen all our discussions about AI more as a tool. I think we are now moving into a discussion and conversation to see AI more as an infrastructure. It's just like nobody talks about mobile or digital in today's time anymore. And this is AI. It has an impact on every single piece of our business and of course of our life. So we will see a lot of AI topics across all kind of discussions. We will have a lot of AI focused companies coming in and present their solutions, but it's all about presenting solutions for tomorrow's business. It's no longer just looking into the future, it's really what is the impact in today's time.
And what are some of the programs that you're looking forward to at Possible?
It is for sure all about AI, but in addition to this, it's about Gen Z, it's about creator economy and the new layer of creativity, combining technology and the tools we are working with. It's a lot about technology because this is how marketing decisions are heavily influenced as well. But we will see also a lot of creators and influencers on stage because they are representing today's consumers.
Is there anyone you're particularly excited about?
As you can imagine, it's difficult for me to come up with one, but I can make sure that we have a very interesting lineup across all 3 days. And it's a combination of the most famous industry leaders, the most famous CMOs from the biggest brands, but also talents and celebrities as well.
How can Possible also be a platform for growth for these brands and these marketing professionals?
We see it not just as an event, as I said at the beginning. So platform means to bring the right people into the room. This is the most important approach for us. It's not about quantity anymore. So I think in today's time, it's not about size of an event, it's all about the quality. Executives, decision makers, and brands, they're spending their budget in fewer, more impact-driven events. And this is what we became within 3 years. And therefore, it's an all-year-round approach. We would like to stay connected with the community all year round. So our goal is, in addition to the main event every year in Miami, to go out all year round and maybe also beyond that market here in the US.
All right, and do you think that there is a benefit to having everyone in person connecting at this event?
It may sound a bit old-fashioned, but yes, especially because of this AI or tech accelerated world we are living in. I think it's even more important to build trust, and I believe that this only can happen in-person decision environments like Possible. So I think the real business opportunities we want to create happens in person, and this is why we are organizing so many meetings, pre-scheduled meetings, and yeah, I believe completely into this approach.
If someone wants to attend Possible, how can they do it? Who is this for? And how can they learn more?
It's all about marketeers, CEOs from brands, from tech companies, and all who belongs to or everybody who belongs to the marketing industry, agencies, consultancies, media companies. They're all there.
And how long does it take you to plan Possible? Is it an event that you're planning all year? Are you already looking forward to the next one?
So Possible this year happens from 27th to 29th of April. On the 30th of April, we are starting to work on 27th.
That's how it usually works.
It works, yeah, it is.
All right, Christian Mucha, Possible's global president and co-founder, thank you so much for joining us at the New York Stock Exchange. In other news, MotoGP returns to the U.S. this week with the series holding its USA Grand Prix event in Austin, Texas this weekend. But before the race gets underway, a pair of competitors made a stop right here at the NYSE earlier this week. I spoke with Franco Morbidelli and Fabio Di Gianantonio, who finished third in last week's race in Brazil, about their backstory and the excitement leading up to this weekend's Grand Prix. Check it out.
Well, I started when I was a little kid as a passion. My father was a mechanic, and he put me on a small motorcycle when I was 2 years and a half, and we started racing and together till arriving in the World Championship now. And yeah, it's been quite a long journey, made by passion, a lot of work, some injuries as well, but a really fun ride.
A lot of practice?
As well, yeah.
Yeah, what is your practice schedule like?
Well, it's quite busy, but it's nice. A couple of times a week we get to ride the motorcycles. That's the fun part. That's the part where the adrenaline gets higher, and it really is where our sports revolves around. So it's very nice, that part of a training, but also, you know, the grinding in the gym and some running. It's quite tough. Yeah.
And I understand you both drive for Valentino Rossi. He is described as the GOAT. What is that experience like, Fabio?
Yeah, well, for sure, racing for his team is something amazing. You know, I'm super proud of it. It's like he's the GOAT because he has won most of everyone, like most wins, most championships, and he's just the best ever. So having him as a boss and as a mentor, as a kind of friend that you can text him and ask him a lot of advice is a huge moment, a proud moment for me, but also a huge opportunity to grow and improve in what you do. So yeah, that's amazing.
Do you mentor anyone?
What? Sorry?
Do you mentor anyone? Do you help drivers that are just coming up?
I try somehow with my manager. We try to help some little kids, but for sure I'm not in the position of Val at the moment. That Valentino is much more higher than me.
All right, and this course that we were talking about in Austin, Texas, what is the most technical part of it, and what are the challenges of it?
Definitely Sector 1 in Coda is one of the most technicals in the world, and it's unique. It's full of direction changes, and there are many corners one after the other, and it's really difficult to interpret it. And but Fabio is really quick in that sector, so definitely we will try to learn from him. And then speaking about the track itself, it's amazing. It's typical American style, very long, wide, full of corners. I really like to be there.
Thanks, Franco Morbidelli and Fabio Di Gianantonio, for that interview. And staying on the topic of upcoming sporting events, the NCAA tournament action continues starting today as the field will dwindle from the 16 teams to 4 by the end of the week. But not all of the action is taking place on the court. I recently spoke with Kenji Stevenson, president of 329 Services, about how revenue sharing and the name, image, and likeness era is changing the sport. Take a listen.
Yeah, so I think it's affected the tournament a couple different ways. One, we're not seeing as many upsets in the beginning. We saw Texas and Iowa advance over Florida, and those are really Power 4 schools, big schools, so I wouldn't consider those as upsets. But anytime you have, a person, an athlete that's getting paid millions of dollars, they're generally going to be better than the schools and the players that aren't getting paid at all. So we may have some disparity in the earlier games, but I think that just sets us up for having greater games later in the tournament. If you look at the Sweet 16 headed on down, we have some monster teams in there. They're all pretty much Power 4 schools or big-name schools. So I think while people may be sort of disappointed that there wasn't the traditional upsets that we're used to seeing, I think it'll be made up for on the back end with some pretty outstanding games as we move forward.
All right, and we're nearly 5 years into the name, image, and likeness era in college sports where athletes can make money off of their brand. What are some ways that schools are getting creative?
Absolutely, actually. We saw some creativity even before the NCAA tournament got started. We saw in the Big 12 tournament where they had an LED screen actually acting as the court. So they had an LED screen that allowed for different visuals of companies to pass through during timeouts and whatever. The problem was that LED screens don't go very well with the soles of Nikes and Adidas basketball shoes. So we had a lot of slippage, and they ended up, having to revert back to the old court. So I love the ingenuity, but just got to work on the execution a little bit. But moving forward, we're having schools looking for cash. And so they're going to be real creative with it. They're going to be coming up with for-profit LLCs in which private equity can then buy into it and then act as an administrator and help with the marketing and the licensing and the ticket sales. And the NCAA has approved these deals with private equity firms as long as the schools retain institutional control. So as long as the schools can, hire and fire coaches and factor in scheduling, they're pretty much going to approve these deals. So we're going to see a lot more money injected into the college system as we move further.
All right, and we can't let you go without a Final Four prediction. Who do you see advancing to Indianapolis and ultimately winning it all?
Okay, Ash, we can write this down in stone. I'm going with the Final Four I got coming out of the East is Duke. Then I got coming out of the South, we have Houston. I got Kingston Flemings. He's looking real good. Then my champion is going to be Arizona. I have Arizona playing Duke in the finals, and then we're going to have Michigan coming out of the Midwest. So like I said earlier, those are all pretty much 1 and 2 seeds. So I think that's who's going to dominate the tournament moving forward, just because with more money, you're able to acquire better talent. So Duke, Houston, Michigan, Arizona. I've got Arizona and Duke in the finals. I'm looking for Arizona, who's been head and shoulders above, pretty much everybody else throughout the season to come out on top.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. And we've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly. It is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. Earlier this hour, IR Impact rang the opening bell to celebrate last night's Impact Awards held right here in New York City. Joining me now is Steve Wade, IR Impact's head of content. Steve, welcome to the New York Stock Exchange.
Pleasure to be here. Thanks for having us.
You shared with me that it was your first time ringing the bell. What was that moment like?
Little bit nerving, but just incredible. Just to come to a place like this with so much history and be able to be given the honor to do that was just fascinating. We absolutely loved it.
And what does it mean to celebrate the IR Impact Awards here at the New York Stock Exchange? What is the significance of that?
Yeah, absolutely. And, for anyone that doesn't know, IR Impact Awards are celebrating the investor relations profession. So that really critical job function at companies that are the conduit between investors and the issuers themselves as well. So to celebrate the award winners, the tremendous effort that they put in for keeping their investors, keeping their analysts informed was just fantastic. And it's so great to have so many NYSE-listed companies that won awards today, and it's really great just to see the efforts get better and better each time.
That's right, Procter & Gamble, Visa, a bunch of NYSE-listed companies. What were some of your favorite categories or the ones that surprised you the most?
I do think my favorite category is we have this award called the IR Impact Award, and that's where an investor relations professional has made a huge impact within their company. Sometimes that happens when things are going really bad, and that's when investor relations professionals kind of rise up and show their value. So that is always a special category, how you can manage a crisis or difficult times. But one of the most inspiring categories is actually our brand new AI and technology category as well. So there's people like Brian Kloster at AutoNation who are just doing incredibly inspiring things and pushing the profession forward by integrating artificial intelligence into their work as well. So yeah, that's really great.
What makes a strong investor relations professional or investor relations business unit?
Absolutely. It's a cocktail of things. So first of all, you need to be calm, you need to be transparent, you need to be incredibly knowledgeable with the numbers. Above everything else, you need to tell the story. But the biggest thing that you need is an ability to create relationships. I mean, it's in the name, right? Investor relations. So it's the ability, when things are good, when things are bad, just to be able to be that trusted source of information for all of your analysts, investors, and every single one of your stakeholders, as well as your C-suite as well.
You mentioned investors and analysts, and I understand that they vote on these awards. Why is that especially significant?
It's really important because, you know, it's not just us as a committee saying, oh, we like these people. It's completely democratic. So what we do is we go out to thousands and thousands of buy-side portfolio managers, investment analysts, and we ask them, who is the best investor relations team in the country? So every single listed company is eligible for these awards. And it really is like a people's choice. So if you're doing a great job by your stakeholders, then you're going to win those awards because they're going to be compelled to vote for you, to say that you're doing a good job. And that is such a great thing to show your business that actually, you know, the people that we're serving, the people that are providing us with capital, are really recognizing our efforts. So we love that.
We just have a few seconds left, but in the last 20, 30 seconds, what role is AI playing in investor relations? Do you feel like it's changing things?
I mean, I think AI is changing everything, right? But particularly in investor relations, when so much is focused on the news flow, the quarterly earnings cycle, the information flow is just going to get faster. There's going to be more content out there. And it's also changing the investment process, and that's going to have a knock-on effect on IR professionals. But plus ça change, we'll get through, and the relationships remain constant.
Steve Wade, Head of Content, thank you so much for joining us at the New York Stock Exchange, and congratulations. That's going to do it for today's coverage on NYSE Live. I'm Ashley Mastronardi. Have a great day.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?